Alright, thank you guys so much for tuning into today's video. Today I'll be recapping the very first setup here for the month of June. The very first trade here. And to dive right in, the first thing that I do want to mention for this trade is that it is based off of the weekly higher time frame objective, and the way that I aligned myself with the bullish weekly order flow is on the daily time frame, and my entry pattern is on the 10-hour fair value gap. So the first thing that I want to explain is the higher time frame objective of this setup. So with the way that we closed here on this weekly candle, you can kind of see that the closure is where my mouse is, and the close of last week's candle was like visibly closer to the weekly high than it is to the weekly low. So that the way that I interpret this information is that within the very next weekly candle, we should take out that weekly high. I don't know exactly what the day and what the time we should take out the weekly high, but that's going to be my objective. And so now that I have an understanding that I'm bullish, right? I'm going to be bullish on the weekly order flow. I go onto the daily time frame and I notice that, this daily candle here on Friday, it's pretty bullish, right? The daily candle suggests the same idea. Apply the same concepts of what I just did on the weekly time frame, but on the daily time frame. So you'll notice here that the daily candle closure on Friday, the closure is closer to the daily high than it is to the daily low. And not only that, but like it's a pretty bullish closure, right? You can kind of tell that within the next daily candle, we should take out the daily high. And so, knowing that, I have my higher time frame objective and I have my model. So those are the two components out of the three that I require. And the only thing that's left is to find a fair value gap on the lower time frames respective to the daily time frame that supports the bullish order flow, both on the daily time frame and the weekly time frame. And so you'll notice here that there is a 10-hour fair value gap, and this 10-hour fair value gap is a busy buy side imbalance, sell side inefficiency, and it's a fair value gap that should be respected to continue higher. It's a bullish fair value gap. And there are times where ICT mentions, this fair value gap should be respected. This fair value gap shouldn't be respected. The way that I know which fair value gap should be respected is based on the model and the higher time frame objective. So it's kind of like a domino effect where one has an influence on another. So in this case, the weekly has influence on the daily has influence on the 10-hour, and they're all kind of working together here. So imagine the weekly, the daily, and the 10-hour as like a set of gears where, in order for a bike to rotate and work efficiently, they have to be all kind of like, they can't be going against each other. The gears can't be rotating in opposite directions. And if they do, then it's just going to get stuck. So that's kind of what I'm doing here. That's kind of what the concept behind these utilizing these three time frames, right? And one thing that I do want to mention is that notice how the daily high is different than the weekly high. To me, this means that once we complete the daily objective, there's a bigger reason why we should continue to expand. So like imagine there's a really big magnet at the weekly high and there's a smaller magnet at the daily high. So the smaller magnet is going to be drawing you towards that smaller magnet, but overall the weekly time frame, there is that bigger magnet that wants to pull you towards that thing, and that's kind of the concepts behind that. And so let's go into the 1 hour time frame just to show you a little bit more into depth of what prices look like. So here you can notice that there is that 10-hour fair value gap. There's a gap between the first candle's high and the third candle's low. That creates that fair value gap. And so there is this illustration where I drew an open, low, high, and you can see that in the illustration we're targeting the previous day high, and we're drawing just means we're going towards the weekly high. And so once prices dips back into this 10-hour fair value gap, I take my entry, and this is pretty much what it looked like. We opened up here at the weekly open. I am buying below the open, and as you guys can see, here we are. So we're slowly kind of like inside the 10-hour fair value gap during the Asian and London session. But as we get onto the New York AM session, we expanded towards the daily high. We take out the daily high, and this is where I actually I took off profits here. And there are two reasons for this. Well, first is that I only had one contract going into this setup. It was a daily. It was based on the daily time frame, so the ranges are a little bit larger. And if I had 5 contracts, it would have gone against my risk to reward kind of setup. So only one contract going to this setup. I took off that one contract once we took out previous day high. And I also noticed that NQ, we had taken out previous day high here at this specific moment, but on ES, we didn't. So because there was SMT between NQ and ES at previous day high, that's kind of another confluence on why I decided to just take profits there. And that's pretty much all for the setup. The only thing left is the kind of the risk to reward things here. Oh, give me 1 second. Someone's.
Hey, good morning. My name is Kenny Parker.
Scam calls. Sorry. So the risk to reward details here. So overall, the risk to reward was a 1 to 1.12. So essentially, from the entry point to the previous day high was a 1 to 1.12, which basically means I'm risking $1 to make $1.12 at the daily high. But overall targets was the weekly high, right? Which was a 1 to 1.75, which is essentially you're risking $1 to basically make $2. And total risk here and total reward was 178 to 199 at the daily high. I'm sure if I were to move the targets up to the weekly high, this would have been a little bit different. the total number of ticks, or I guess you would say points here in this case. The total number of points that I was able to capture was, no, it's ticks, was 399. And number of contracts, 1. Net profit of this entire setup was 187 and 18 cents, and that's the total account balance right now. But yeah, so that's kind of all I have for the very first trade that I took of the month of June, and even to begin this, I guess, 10K journey. Yeah, that's gonna be all for the video. Hopefully that gives you a little bit more insight of what occurred during the very first trade for me. And yeah, thank you guys so much for tuning in, and until next video, be safe.